Hello everyone, welcome to the market opening bell on Wednesday, July 30th, your 10-minute guide to the stock market. The market is awaiting the US-China trade talks with Hong Kong stocks showing mixed softness on Tuesday. The Hang Seng Index opened 107 points lower, falling as much as 309 points to 25,252 in the morning session. The decline narrowed to 31 points at 25,530 in the afternoon, closing down 37 points or 0.1% at 25,524. The H-share index fell 31 points or 0.3% to 9,145, and the Hang Seng Tech Index dropped 19 points or 0.3% to 5,644. Total market turnover was 267 billion Hong Kong dollars. Southbound trading turnover was 155.4 billion Hong Kong dollars, with southbound funds net buying 127.2 billion in Hong Kong stocks. Among them, net purchases include Xiaomi, totaling 1.659 billion, Tencent 832 million, Alibaba 753 million, CSPC Pharmaceutical 651 million, Innovent Biologics 514 million, Guotai Junan International 430 million, SMIC 366 million, Jinxin Fertility 194 million. Net sales include Pop Mart totaling 351 million, Meituan 287 million. According to statistics, southbound funds have net bought Tencent for 4 consecutive days, totaling 2.089 billion. Xiaomi for 3 consecutive days, totaling 2.446 billion. Alibaba for 3 consecutive days, totaling 1.272 billion. And SMIC for 3 consecutive days, totaling 1.303 billion. The Hong Kong Stock Exchange released highlights for the first half of 2025. The average daily turnover was 240.2 billion Hong Kong dollars, a 118% increase from 110.4 billion Hong Kong dollars in the same period last year. The total market capitalization rose to 42.7 trillion Hong Kong dollars, up 33% from 2024. Technically, the Hang Seng Index remains in a high-level consolidation phase, still not filling the upward gap from last Wednesday between 25,130 and 25,228. Mainland Chinese markets strengthened in the afternoon, with the Chinex index rising nearly 2%. The Shanghai Composite Index closed at 3,609, up 12 points or 0.3%. The Shenzhen Component Index closed at 11,289, up 72 points or 0.6%. Combined turnover in Shanghai and Shenzhen was 1.803 trillion yuan, up 60.9 billion yuan from the previous day. The renminbi central parity rate was 7.1511 against the US dollar, down 44 pips from the previous day, hitting a one-week low. Tongcheng Travel saw its stock price plummet on Monday, possibly linked to news of its investment in Dalian Shengya Tourism, an Asia offline scenic sport operator. Tongcheng Travel announced plans to spend 956 million yuan to acquire a controlling stake in Dalian Shengya. This marks Tongcheng's second move into offline assets in recent months, following its 2.49 billion yuan acquisition of nearly 600 Wanda hotels in April, the largest acquisition in the travel and hospitality industry in recent years. Upon completion, Tongcheng's subsidiary, Shanghai Tongcheng, will hold a 23.08% stake in Dalian Shengya and secure 30.88% voting rights through a delegation arrangement, making Shanghai Tongcheng the controlling shareholder. Established in 1994, Dalian Shengya is Northeast China's first Asia-listed cultural and tourism company, operating major attractions like Dalian Shengya Ocean World, Shengya Polar World, and Harbin Polar Park's ocean and dinosaur exhibits. With strong IP and operational expertise, However, intense shareholder disputes have led to years of power struggles, including violent conflicts, stalling strategic execution. Tongcheng's acquisition and board restructuring aim to resolve Dalian Shengya's governance chaos and improve decision-making efficiency. Financially, Dalian Shengya has faced significant losses, with a net loss exceeding 70 million yuan in 2024 and a projected loss of 12.71 to 19.07 million yuan for first half 2025, shifting from profit to loss. Its debt-to-asset ratio reached 85.6% by March 2025, with total liabilities of 1.632 billion yuan, mainly from bank loans and non-operating debts, raising concerns about short-term repayment risks. The market reaction suggests some Tongcheng shareholders disapprove of the acquisition, viewing it as a shift from a light asset to a heavy asset model, potentially dragging down profitability. Additionally, Dalian Shengya's governance issues and integration risks add uncertainty to profitability. Companies announcing results today include HSBC Holdings, Hang Seng Bank, Budweiser APAC, CATL, Hanglong Properties, Hanglong Group, Hisense Home Appliances, Prada, and CEC International. HSBC's first half 2025 reported pre-tax profit is estimated at 15.477 to 16.073 billion US dollars, down 25.4% to 28.2% from 21.556 billion US dollars in first half 2024, mainly due to a low interest environment, notable HIBOR decline, and one-off factors in 2024, such as a 4.8 billion US dollar gain from the Canadian banking business sale and a 1.2 billion US dollar impairment from classifying the Argentine business as held for sale. HSBC's Q2 2025 per share dividend is expected to be 10 US cents, with a share buyback program of 2.5 to 3 billion US dollars likely to be announced. Investors will focus on management's guidance on full-year revenue, credit growth, the impact of US tariffs, and dividend and buyback plans. US and Chinese officials agree on Tuesday to seek an extension of the 90-day tariff truce, with no major breakthroughs announced. US officials stated that the decision to extend the trade truce agreement, set to expire on August 12, or to significantly increase tariffs again, will be made by President Trump. US stock markets closed lower. The S&P 500 index hit the new high at the open, but ended down 18 points or 0.3% at 6,370. The Nasdaq also reached a new high during the session, but closed down 80 points or 0.4% at 21,098. The Dow fell 204 points or 0.5%, closing at 44,632. The Nasdaq Golden Dragon China Index, reflecting Chinese stocks, fell 103 points or 1.4% to 7,550. Among the Magnificent Seven, Microsoft and Meta will announce earnings today. Nvidia hit the new high but closed down 0.7%. Reports indicate Nvidia has placed an order with TSMC for 300,000 H20 chips to meet strong demand in China. The US government allowed Nvidia to resume H20 chip sales to China this month. According to SemiAnalysis, Nvidia sold about 1 million H20 chips last year, with current inventory at 600,000 to 700,000 units. However, Nvidia requires export licenses from the US government to ship H20 chips, and sources say the US Commerce Department has not yet approved the licenses. Nvidia declined to comment on new orders or license application progress. On the earnings front, Boeing reported a Q2 loss significantly narrowed to 176 million US dollars from 1.09 billion dollars the previous year, with adjusted per share loss of $1.24, better than the expected $1.48 loss. Revenue rose 35% to $22.75 billion, also beating expectations, but the stock fell over 4%. CEO Odbert stated that the change takes time, but differences in overall business performance are starting to show. Starbucks reported a 47% drop in Q2 net profit to $558 million, with adjusted earnings per share of 50 cents, below the expected 65 cents. Revenue grew 4% to $9.5 billion, exceeding expectations. Same-store sales fell 2%, marking the sixth consecutive quarter of decline, worse than the expected 1.3% drop. CEO Brian Niccol noted an earlier-than-expected turnaround, with the stock rising over 4% after hours. Health insurer United Health saw Q2 net profit fall 19% to $3.41 billion, with adjusted earnings per share of $4.08, below the expected $4.48. Revenues rose 12% to $111.6 billion, slightly above the expected $111.5 billion. The company forecast full-year adjusted earnings per share of at least $16, below the expected $20.91, and full-year revenue of $445.5 to $448 billion, below the expected $449.1 billion. United Parcel Service (UPS) reported Q2 adjusted earnings per share of $1.55, slightly below the expected $1.56, with revenue of $21.2 billion, above the expected $20.86 billion. Due to ongoing macroeconomic uncertainty, the company did not provide annual revenue or operating profit guidance for the second consecutive quarter. Procter & Gamble reported Q4 revenue of $20.84 billion, slightly above expectations, with core earnings per share of $1.48, also beating forecasts. However, the company projected 2026 fiscal year net sales growth of 1% to 5%, below the expected 3.09%, and core earnings per share of $6.83 to $7.09, below the expected $6.99. P&G announced it will raise prices on about a quarter of its U.S. products starting this month to offset rising costs from new tariffs. The Conference Board's July Consumer Confidence Index rose 2 points to 97.2, up from a revised 95.2 in June. Pessimism about the future is likely in July, but remains below last year's high. Additionally, June job openings fell by 275,000 to 7.437 million, below the expected 7.55 million. Our stock pick today is BOAN Biotech, stock code 6955. BOAN Biotech is a comprehensive biopharmaceutical company specializing in the research, development, production, and commercialization of biologics, focusing on therapeutic areas such as oncology, autoimmune diseases, ophthalmology, and metabolic disorders. The group conducts drug discovery and activities around multiple platforms, including a fully human antibody, transgenic mouse and phage display technology platform, a bispecific T-cell engager technology platform, an antibody drug conjugate ADC technology platform, and a cell therapy platform. The group's operations span the entire industry chain, covering antibody discovery, cell line development, upstream and downstream process development, analytical and bioanalytical method development, technology transfer, preclinical studies, clinical research, regulatory affairs, registration, and commercial scale production. In the field of cell therapy, the group focuses on next-generation enhanced and regulated CAR-T technology, developing safer, more effective, and affordable treatment products for patients. The group's product portfolio includes three commercialized products, Bo Yo Nuo, Bo Yo Bei, and Bo Luo Jia, which have been successfully launched in mainland China and sold to over 2,928 target hospitals and institutions. The group has initiated several post-marketing clinical observational studies for Boyo Nuo and Boyo Bay. The group has sufficient production capacity to meet commercial demands. As of December 31st, 2024, its commercial production capacity was 9,000 liters, with a pilot scale capacity of 2,000 liters. By improving and upgrading production processes for existing products, advancing digital manufacturing, and adopting domestic substitutes to reduce production costs, the group has significantly enhanced quality and efficiency. Its product pipeline includes several innovative biologics with international intellectual property protection and multiple biosimilar candidates. Beyond China, the group is also developing biopharmaceutical products in overseas markets such as the United States, the EU, and Japan. Two candidate drugs, BA5101 and BA9101, have entered the Biologics License Application (BLA) stage in China. Notably, BA5101 is reportedly the only one biosimilar of Trulicity in the world to have submitted a BLA. The group is actively exploring external business development and out-licensing arrangements. In January 2024, the group entered into an agreement with Joint Care Pharmaceutical Group for the exclusive authorization and commercialization of BA2101 in mainland China for the treatment of asthma, chronic obstructive pulmonary disease, and other respiratory diseases. The group also signed an agreement with Cencor Biologics, granting non-exclusive use of its proprietary BAHIEX cell-stable cell line development platform in mainland China for the development of various antibodies and therapeutic protein drugs. In November 2024, the group entered into a licensing agreement with a strategic partner to commercialize denosumab injections in the Brazilian market. Additionally, it has engaged in discussions with multiple pharmaceutical companies, including multinationals and investment institutions, regarding licensing or co-development of its innovative drug pipeline, and is exploring international commercialization opportunities with overseas partners for products already launched or having completed clinical trials in China. Recommended buy price 18.5 Hong Kong dollars. Target price $20.5. Stop loss $17.5. I do not hold the above mentioned stock.